Jamie here, JB here. Hope everyone's doing outstanding. February 10th, 2025, 8:59 on this fine Monday morning. Talk really quick about the markets, some of the names I'm looking at. Go from there. S&P futures are higher, reversing the trend from the previous 2 Mondays where we had the deep-seek sell-off, and last week it was tariffs. So you thought, what was going to be next? And it turns out it was nothing, although there were some tariffs announced yesterday on aluminum and steel across the board, 25%. I would assume, I put on the watch this morning, and I'm sure you hear the chat. There's going to be some more announcements. I don't know if it's going to be the EU, UK, whatever it's going to be. There's going to be something else that comes out this week. So don't be surprised if there's some kind of either a knee-jerk reaction or some pressure or what have you when those headlines hit. But it's just kind of what's been going on the last 2 weeks or 3 weeks. Just got to get used to it for now. And it's stuff that happened back in 2018 as well. So it's not anything different. But it's just unfortunately, well, not unfortunately, you get used to. I mean, back in November and early December, the market was just humming along, right? Not just slow and steady. And now we have volatility, and volatility sometimes can't be fun. But we'll see how things play out here today. S&P was looking great Friday at the open, all the way up to 608, and then we had the Michigan consumer sentiment come out and substantially lowered expectations. When the consumer makes a majority of the GDP number, 60 whatever percent of the GDP comes from the consumer. I don't know if that's some of the reason it sold off. I can't remember the last time we had such a marked move on that on the CPI, not CPI, consumer confidence data. I mean, obviously this week we have CPI on Wednesday. We have PPI on Thursday. Fed Chair Powell speaks in front of the Banking Finance Committee. In front of the Senate and Congress committees Tuesday and Wednesday. Those are both at 10 a.m. I put that on the watch list. I mean, this happens every 6 months, semi-annual testimony, and it's always his prepared remarks, and typically they'll be out before the open. So I don't know if they'll be out at 8:30, 8 o'clock. And then they'll come at 10 o'clock and you'll watch it and they just pepper them with the stupidest questions. It's almost like they puff their chest to give themselves importance, and it really does not do much for the markets. And I'm sure there's going to be a lot of conversation now around the tariffs. So we'll get a lot of questions on that. And then he'll get questions around his job security. So sometimes I put it on because it makes me laugh to watch it. But those will be on Tuesday and Wednesday. And then we still have retail sales data on Friday and then a slew of earnings again this week. So it's definitely going to be bumpy. But I think it's what we've had over the last Monday and then the previous Monday with DeepSeek. The reason the market sold off was like the uncertainty part, right? It's kind of out of the blue news events and catalysts. At least now we know this. We know what we have ahead of us this week, pending any really major surprise announcement, right? So that's kind of the SPY. So the glass half full empty situation. I always like to look at the market as glass half full. Came up to that 608 and pulled back. I still think 610's coming. And then we've kind of got through a lot of the possible headwinds the last 2 weeks. We got through the mega cap earnings, and you take a look at the Magnificent Seven. We still have Nvidia left, but outside of Meta, all those other names have struggled since their earnings. Tesla, Microsoft, Google, Amazon. So in spite of that, the market's kind of holding up well. So I take that as a positive. But then on the flip side, the negative, and I put this on the watch list. And I talked about it last week on the rants, higher highs, lower lows, lower highs, and lower lows on the SPY. And since the middle of January, when we hit that 610 handle, and then we had the DeepSeek sell-off, then that bounce, and the tariff sell-off, and then the bounce. Don't want to see deja vu here this week. And then, if we do get a pull, you want to see that 590 hold. Otherwise, I'm not saying I would get my bearish suit on, but I would definitely be skewed bearish. That's the overall market. Also, yields ticked up a little bit on Friday. Not a huge deal. Hopefully, they resume their downtrend, and I think that'll also be a positive catalyst for markets. All right, individual names. So speaking of earnings, ROKU reports earnings Thursday after the close. Implied move, I think, is 14%. The stock finally had a strong day on Friday despite the market weakness, up nearly 5%, held the gains, closed at the highs, and it's gapping higher here this morning. If it gets over 86.75, that'll be the December highs, and the December highs were 52-week highs. So that could set a spark to get it to over $90 before earnings. The hope or the plan here would be to be able to lock some of my calls in before earnings to cover costs. If I can't, I might just hold them, or I might look to close them out and get more higher strikes, but inexpensive later dated calls just to give me some time. But my thoughts on ROKU. I'm not going to go crazy on it right now. I'll give you the bull case, but I really like it for upside. And I think any solid quarter with a beat and raise It should put it over $100. The thing with Roku, it's had some beat and raises before on previous earnings, and the stock's still sold off because I think there's a lot of folks who still don't believe in the story. And hopefully that's not the case this time around, but I'm sure it's going to be a strong quarter. And also you have to take a look at what you look at Netflix, you look at the content streamers, and of the prior, you look at a name like Spotify, just monster numbers. So I think that all just plays right into Roku's wheelhouse. So that's Roku. Teladoc, what a crazy move last week. Some of it before the Citron Research tweets that have come out, and then a lot of it after. Tweeted again on Friday. The stock looked like it was kind of stagnant, and that kicked it in the butt. Closed up another 8%. I was getting on the rant Friday afternoon, and I was looking. I said I got to get some of my calls out. So I got some more of my March strikes out for a little close to 300%. I locked the rest of my February strikes in just because I didn't want to see the premiums come out, because it was a position that wasn't looking so great coming into last week. And then we had that nice move, the nice news, the acquisition news that helped it at the start of the week. And then obviously the Citron comments. If it breaks over 14, it could be off to the races. I'm going to say the same thing about SSYS. They also report earnings in 2 weeks. And if there's any positive commentary on that, I think it trades over $20. The thing is, fundamentally, you can make the case it could trade substantially higher. It's just the competitive landscape, right? I mean, that's been some of the bear case after its big boost from the COVID rally. But really like TDOC. Don't be surprised if I add some more strikes. I put that on the watch list this morning. Strong day for TripAdvisor on Friday. That was with Expedia's earnings helping kind of push the stock. Nice bull flag breakout. I was talking about the bull flag for the last 2 weeks. This could be it. If it is, it's going to trade well into the 19s, if not 20. Still looking to get some of my June, the rest possibly of my June strikes out. I'm already writing freebies on both the March and June strikes. Maybe today's the day I look to get the Junes out. And then unfortunately, I do have weekly strikes on some all the way to March. But then after that, they don't have April calls and it goes to June. So it's kind of tough to find a risk reward strike. So I'll continue to look for opportunities to add more strikes on Tripto. Arista Networks, I added some strikes into this week. Unfortunately, I mistyped the strike when I posted a trade. And I mean, if you could get the price on the 120s, then you have a better broker, or you should have been, if you saw it right away, you would understand it's the date, and then you look at the price and you would see, wow, it's the 125s. I think Arista trades over 125 this week. You have that whole backdrop with this infrastructure spend on the mega cap names, Google and Amazon being the last two to announce monster CapEx for this year. That all bodes well, especially for names like Arista Networks, the infrastructure side of it, the Broadcoms. So really like Arista Networks. I'll look to continue to, it's been a great trade over the last couple of weeks anyway, and these bounces, I'll look to close some out to cover costs on the bounce here and then ride the rest. SSYS took a breather, down 5% on Friday, but still up 30% for the week. Still like that one. I don't know if I'll add any strikes. Yeah, Shopify got upgraded this morning. Shopify reports earnings this week too, so tough with the premiums. So nice move around Shopify. But still like SSYS. If it breaks 14, I'll look for some more strikes there. Just like Teladoc, I think it could trade up near $20. Lemonade's been one that you could, I was in and out back, that big move in November. I think I would have the 35 strikes went all the way up to $55. 31% short interest. They report earnings in 2.5 weeks. The issue with Lemonade, the premiums are insane for the earnings. Anytime you go past the earnings, the week of the earnings have passed, it's like a 20, 22, 24% plus implied move. You go with this week's strikes or next week's strikes, and the premiums are pretty inexpensive on a risk reward basis. Right at its 50-day moving average. Don't be surprised if I finally pull the trigger and add some spec calls. I was actually looking last week and then on Friday, and I kind of passed with the market weakness. But it's one of those names. Once it gets going, 31% short interest, misunderstood story, in my opinion. It has that whole backdrop of this AI theme. So that's Lemonade. And then DocuSign, back-to-back red sessions to end the week. Thankfully, on Thursday, it looked like it was going to break $100. It was 99 and change, then gave it back. And then Friday, it broke through the 50-day. 50 days, 91.92. If you can get back over that, I think it trades over 100. I keep saying 107. The February 21st hundreds look interesting on a risk reward basis, so I might get those at the open. And that's it, folks. Let's have a great week. I'll be back on the audio later. Rock and roll.